Lately at the Currency Shop, we've been updating you weekly on the Australian dollar. But we thought it might be worth diving a little deeper and seeing how the Australian dollar has been performing over the last 2 years to get a better idea of where it's actually sitting at the moment. In the last few weeks, we've seen the Australian dollar hit an 11-month low after hitting a high in January. So we've seen it change a lot this year. In this video, we're going to look at the Australian dollar against the US dollar, the euro, the pound and the New Zealand dollar. And we'll have a look at what the major banks are forecasting for the Australian dollar by the end of the year. Generally, when you hear about the Australian dollar, it's compared against the US dollar because this gives us the best idea of how it's performing globally. We've had a lot of fluctuation against the US dollar recently, but since the beginning of 2016, the Australian dollar has been steadily climbing. This climb can be attributed to 3 things: increasing commodity prices, steady interest rates, and a generally weaker US dollar. It's a slightly different story for the Australian dollar against the euro because these currencies have been on a bit more of a roller coaster. The Aussie spent all of 2016 rising to its peak of 72.5 euro cents in early 2017. Since then, it's fallen more than 10 cents. This fall is less to do with the Australian dollar being weak and more to do with the fact that the European economy has strengthened over the last couple of years. Brexit had the biggest impact on the Australian dollar against the pound. Brexit took everyone by surprise, which is why the pound weakened so suddenly. Against the pound, the Australian dollar rocketed 30% in the middle of 2016 when it happened. Since then, the Aussie has been on a downward trend. This is because the economy has held up much better than people expected post-Brexit. Okay, let's have a look at the Australian and New Zealand dollar exchange rates. In the last 2 years, the exchange rate has been pretty volatile between the Aussie and New Zealand dollars. We've seen it go up and down quite a bit, but it always seems to be stuck somewhere between 1.0250 and 1.1250. The biggest movers for these currencies has been commodity prices and interest rates in New Zealand. So now that we know what's been happening with those currencies, let's have a look at what the banks are forecasting for the Australian dollar against the majors by the end of the year. As you can see, forecasts for the Australian dollar against most currencies is for it to go down slightly, or stay the same. This is quite different to the optimistic forecasts the banks had at the start of the year, which saw the Australian dollar going up by June. So what does all of this mean? Well, while the Australian dollar has dropped against the euro, pound, and even the US dollar recently, its lowest point this year is still higher than it was 18 months ago against the US dollar. So it's really not all bad news. Hopefully this video has given you a better idea of where the Australian dollar is at the moment and made us realise that it's really not as pessimistic as it might seem. If you want regular updates about the Australian dollar, make sure you're subscribed to our channel, and if you have notifications turned on, you will never miss one of our weekly updates.